A massive 169 billion Shiba Inu withdrawal from a major exchange has sent shockwaves through the market, sparking intense speculation. Is this the long-awaited signal? Is this the start of a massive bull market accumulation phase? Let's break down the on-chain data and uncover the truth behind this monumental whale move. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The cryptocurrency market is often dictated by the movements of large wallet holders, commonly referred to as whales. Today's focal point is a monumental on-chain event: the withdrawal of 169 billion Shiba Inu tokens from the Coinbase exchange. This script will analyze this move, which is worth approximately $1.49 million at current prices, and assess its true significance. A large withdrawal from an exchange is typically interpreted as a bullish signal, as it suggests the tokens are being moved to cold storage for long-term holding, thereby reducing the immediate selling pressure on the market. This is a critical distinction, as a deposit to an exchange signals an intent to sell, while a withdrawal signals an intent to hold. The core question is whether this single, massive withdrawal is an isolated event, or the first domino in a series of moves that signal the start of a massive bull market accumulation phase, a necessary precursor to a major price rally. The history of Shiba Inu is punctuated by such whale movements, which have often preceded significant price swings, making this particular withdrawal a high-conviction event that demands immediate and thorough analysis. The current market consolidation provides the perfect backdrop for such a strategic move, suggesting that smart money is positioning itself before the next major cycle begins. This move is a powerful indication that the underlying value proposition of Shiba Inu is being recognized by those with the deepest pockets. The main event is the massive single transaction withdrawal of 169 million Shiba Inu tokens from the Coinbase exchange. A mysterious whale pulled this entire volume out of the major US exchange in a single day. This move is highly significant because it represents a substantial reduction in the immediate supply of Shiba Inu available for sale on the exchange. The tokens were moved to a clean, non-exchange wallet, which analysts interpret as a strong indication of a long-term holding strategy. This type of large-scale, non-selling activity is a classic sign of accumulation, where smart money is positioning itself for a future price increase. The timing of the withdrawal, occurring during a period of market consolidation, further fuels the speculation that this whale is anticipating a major upward trend. The withdrawal was executed in a manner designed to minimize market impact, moving the tokens directly from a known Coinbase hot wallet to a newly created clean address. This on-chain signature is crucial, as it differentiates a strategic accumulation from a simple wallet rebalancing. The total value of the withdrawn tokens, approximately $1.49 million, is a significant capital commitment, especially given the current market uncertainty. This move effectively removes a substantial block of sell-side liquidity, creating a potential supply shock that could amplify any future buying pressure. The market's reaction to this whale activity has been one of cautious optimism, with the price showing resilience despite broader market volatility. Shiba Inu is currently trading at 843 units, a figure that reflects a slight consolidation after a recent surge. The 24-hour trading volume stands at $129 million, and the market capitalization is over $5 billion. The whale withdrawal, which reduces the supply on exchanges, has a direct positive impact on the price by alleviating selling pressure. Analysts note that this move is a powerful counter-signal to the recent negative net flow of roughly $1.24 million recorded on December 5th. The whale's action suggests a fundamental belief in the token's future value, which is helping to stabilize the price and build a strong base for a potential rally. This withdrawal creates a localized liquidity shock on the exchange, meaning that fewer tokens are available to meet buy orders, which can lead to a sharper price increase when demand returns. The current price stability, despite the overall market's bearish sentiment, is a direct reflection of this whale's strategic move, providing a crucial psychological and technical floor for the price. The on-chain evidence is the most compelling aspect of this story, providing the technical justification for the bull market accumulation thesis. The withdrawal of 169 billion SHIB from an exchange is a direct reduction in the exchange's reserves, which is a key metric for measuring potential selling pressure. When exchange reserves drop, it typically signals reduced sell-side liquidity and increased holding conviction. This move is part of a larger trend where whale-to-exchange flows have decreased significantly, indicating a shift from trading to long-term holding. Technically, the price is holding the key to 20-day simple moving average support, which is a critical level for maintaining a bullish outlook. This support level, currently near 800 units, has been defended multiple times, suggesting a strong technical floor. Furthermore, the relative strength index is hovering in the neutral zone, indicating that the token is neither overbought nor oversold, leaving ample room for a sustained, upward move. The moving average convergence-divergence is also showing signs of a potential bullish crossover, which, when combined with the on-chain accumulation, creates a high probability setup for a significant price swing. This combination of on-chain accumulation and technical support suggests that the market is building a strong foundation for a sustained bull run. The whale's move is the fundamental catalyst that validates the technical resilience of the price. The implication of the 169 billion SHIB withdrawal is that a major market player is betting on a significant price increase, signaling the potential start of a massive bull market accumulation phase. Analysts suggest that this type of strategic withdrawal is a calculated move to minimize the impact of future buying on the market price. By moving the tokens off the exchange, the whale removes the possibility of them being used to suppress the price. This action is a classic example of smart money positioning, where large entities accumulate assets quietly during periods of low sentiment and consolidation. The long-term implication is that if other whales follow suit, the resulting supply shock could lead to an explosive price rally. The current price, which is trading near 843 units, is seen as a low-risk entry point by these large holders, who are positioning themselves before the retail market catches on. This move is a powerful vote of confidence in Shiba Inu future, suggesting that the smart money believes the bottom is in. The analysis further suggests that this accumulation is driven by the anticipation of key fundamental catalysts, such as the continued growth of the Shibarium ecosystem and the increasing efficiency of the token burn mechanism. The whale is essentially front-running the expected positive news flow, creating a self-fulfilling prophecy of a bull market. The Shiba Inu community, the Shib army, is reacting to the whale withdrawal with immense excitement, viewing it as a clear sign of an impending bull run. On social media, the news of the 169 billion SHIB move has become a major talking point, fueling speculation and renewed optimism. Developer hints and updates continue to focus on the utility and ecosystem growth, which provides the fundamental justification for the whale's accumulation. The community is actively tracking the burn rate and the development of the Shibarium Layer 2 solution, which is designed to increase utility and reduce the circulating supply. The whale's action is seen as a validation of the developer's long-term vision, providing a much-needed psychological boost to the community and reinforcing the belief that Shiba Inu is poised for a major upward move. The developers' focus on utility, including the recent push for the Shibarium privacy upgrade, aligns perfectly with the whale's long-term holding strategy. This synergy between on-chain accumulation and fundamental development is a powerful narrative that is resonating deeply within the Shib army, transforming the sentiment from cautious hope to confident anticipation. The community is now actively monitoring the exchange reserves, using the whale's move as a benchmark for future accumulation signals. The short-term forecast, 1 week, 1 month, is now heavily influenced by this massive accumulation event. Analysts suggest that the next key level to watch is the immediate resistance at 910 units. A break above this level, coupled with increased volume, would confirm the start of the accumulation-driven rally. The long-term forecast, 3 months, 3 years, is exceptionally bullish if this whale withdrawal is indeed the start of a broader trend. If exchange reserves continue to drop, the resulting supply shock could propel Shiba Inu toward the previous highs. The key metric to watch is the exchange net flow data. A sustained period of negative net flows, More tokens leaving than entering exchanges will be the final confirmation that the massive bull market accumulation is underway. Furthermore, the market will be closely watching the total number of active addresses and the total value locked on Shibarium. A significant increase in these metrics, driven by the whale's confidence, would provide the fundamental validation needed for a sustained multi-month rally. The ultimate long-term target remains the previous all-time high, but the immediate focus is on clearing the psychological and technical hurdle of the 1,000 unit mark. A balanced opinion must acknowledge that while the 169 billion SHIB withdrawal is a strong bullish signal, it is not without risk. The primary risk is that the whale could be moving the tokens for reasons other than long-term holding, such as an over-the-counter (OTC) sale, which would not be immediately reflected on the exchange. However, the move to a clean, non-exchange wallet significantly mitigates this risk. The second major risk is a sudden, sharp downturn in the broader cryptocurrency market, which could drag Shiba Inu down regardless of its internal accumulation signals. The long-term outlook is overwhelmingly positive, as this type of large-scale withdrawal is a classic indicator of smart money accumulation. Investors should view this event as a high-conviction signal, but must still manage risk by watching the key support at 800 units. The whale's action provides a strong fundamental reason to believe that the market is at an inflection point, poised for a major upward move. The risk-reward ratio is currently heavily skewed in favor of the bulls, provided the 800-unit support holds firm. The key is to monitor for follow-up accumulation from other large wallets to confirm the start of the broader bull market phase. The charts are screaming accumulation, and the 169 billion Shiba Inu withdrawal is the clearest signal yet that the whales are positioning for a massive bull run. We've seen the on-chain data, the technical support, and the fundamental belief in the token's future. The stage is set for a major move. Keep your eyes on the exchange reserves. The next few days will determine if this monumental whale move is the first chapter in Shiba Inu's next great bull market story. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.